Disappointing quarter for Einhorn. With losses of more than 5% for the year, his Greenlight capital down more than 18%.
Tesla, Morgan Stanley cut its worst case forecast for the stock from $97 to $10.
Hi everyone, I'm Ben Lee. This is Financial Growth. Today I want to show you how to avoid being misled by the Wall Street analysts so you can identify correctly who the real winners are in the stock market and in the future. Tesla is a very good example. Wall Street analysts have gotten very wrong about Tesla in the past. As discussed in my previous video, some financial analysts have finally started to turn around and believe in Tesla's future and potential. But so far there's still only a handful of them. Many are still making obviously wrong predictions by cherry-picking data points in a biased manner. So today I'll show you who they are, how they have gotten wrong so that we don't get misled and misinformed by them again. Actually, on the plus side, because of their misunderstanding causing Tesla's stock price to go down, we get the opportunity to buy Tesla shares at a discount. By the way, this is a channel dedicated to help you grow financially. I'm committed to making this channel as helpful to you as possible going forward. If you wouldn't mind, please support me by hitting the like button and subscribe and hit the bell icon so you know as soon as I make another video for you. Thank you so much. Okay, let's dive right in. I want to first talk about Gabe Hoffman. He is the founder of an activist hedge fund called Exeter Capital Management. Here is what he said in 2018 on CNBC.
I believe imminently, in the next couple of months, Elon Musk will be removed as CEO of Tesla.
By the board, Gabe, or by some other outside investigation from the SEC or whatever it might be?
The SEC, this was, in my view, the most egregious and naked example of securities fraud I've ever seen from a CEO in my 18 years as a hedge fund manager.
He is wrong here. Obviously, Elon is still the CEO of Tesla, and he was referring to Elon's tweet about wanting to take Tesla private with new funds priced at $420 a share. For this, I'll let Tasha Kinney from ARK Invest explain further.
Elon Musk has always been really transparent through Twitter, more so than other CEOs. And sometimes, that brings in extra scrutiny. But it also tells us more about what's happening in terms of the operational balance of the company because he tends to be very honest. So, we've been happy with his use of Twitter so far. We think that Tesla needs Elon Musk to make this happen. He's a star figure. He attracts amazing engineering talent, and he's the person who gets his employees to really put in the extra mile and meet those production targets.
Well, I believe the quality of the cars is quite poor.
How often have you driven a Tesla? Do you have one yourself?
I admit that I do not.
How can you say a car is of poor quality when you have never driven it and Tesla's customer satisfaction is the highest among all car brands?
And if we look at the bond market today, the Tesla 2025 bonds are trading at a new high in yield, almost 8%. And the quick and the current ratio, which are financial ratios that any first or second year accounting student knows how to do, are worse for Tesla at June 30th than General Motors was 1 quarter before it filed bankruptcy.
Wrong again. Tesla later obviously didn't file for bankruptcy. In fact, the quarter before that, Model 3 already turned a profit. And then in 2019, Mr. Hoffman went on CNBC again and said,
and they had to chop price down to 50. It's going even lower. They cut price again in July. So yeah, there's demand, but it's at a price that Tesla can't make money and they lose a ton of money.
Wrong. Tesla turned out to be profitable. It was just a growth pain experience during the production ramp-up, as described by Elon Musk as production hell. Moving on, here's Craig Irwin from Roth Capital from just over a year ago in April 2019.
There's hard economic data out there. Bob Lutz has been talking about this for a couple years. I have the data, right? $240 a kilowatt hour is what they're paying for cells out of Japan. The cost of the Gigafactory is higher. And what is Porsche and VW paying? VW is paying $250 a kilowatt hour. There is no economic advantage on battery costs at Tesla. The cost of the batteries are too high for these massive growth numbers that people are projecting.
And that's wrong as well. Tesla's battery cost has always been the lowest in the industry and is still able to continue dropping the cost. Bob Lutz, that he's referring to, we'll talk about him in a moment as well, is an old school from GM. This is entirely not true. Actually, it's very likely that on Tesla's upcoming battery day in September, they'll announce breaking the $100 per kilowatt barrier battery cost to essentially make their cars cheaper to manufacture than an internal combustion engine car.
When do you see these competitors coming online in a meaningful way in terms of true competition to the Tesla?
It's starting this year. That's why I chose to initiate with a bearish perspective, right? Porsche is going to come on with the Taycan. You've got Kia. You've got the
cars do you think they're
I-Pace.
actually going to sell?
So you got to look at the history. So the Cayenne, right? The first they said 10, then they said 20, then it became 40. So it ramped very, very quickly.
Wrong again. It's been more than 3 years since people started saying Tesla's competition is coming. And so far, we haven't seen any. Tesla's technologies are at least 3 years ahead of their competitors. I would say bring them on if they do exist. And I'm sure that Elon Musk will be welcoming them, because at the end, if they are able to catch up, it's the whole world benefiting from having a high availability of EVs. And here is Adam Jonas from Morgan Stanley, also just from a year ago.
Signs of trouble for Tesla. Morgan Stanley cut its worst case forecast for the stock from $97 to $10.
Well, the main reason behind this bearish call that we have out today is what Morgan Stanley analyst Adam Jonas called a risk of contagion to fundamentals. So Jonas said Tesla's share price performance has been driven by 3 major factors. So that's 1, demand for its products, 2, ability to generate cash flow, and then 3, access to capital markets. So this year there has been evidence that there has been significant decline in demand for some of Tesla's vehicles, and that's coming because of that missed deliveries expectations in the first quarter.
Okay, as you guys know, Tesla's price is not and has never been $10 over the last few years. It's unbelievable that they would suggest that. The demand issue, again, as I talked about in a previous video, of which I'll put a link in the description, the issue never existed. Tesla has always been limited by its production capacity. The reason for the drop of deliveries in the beginning of last year was because, as you know, their cars were shipped by batches to Europe and China, and at the time, lots of vehicles were just halfway being shipped instead of being registered to delivered to customers' hands. Again, don't believe what they tell you. And here is Jim Chanos, founder of Chemicals Associates back in 2018.
But the bigger problem is that Porsche's coming.
How expensive? Sorry.
Let's say that again. Do you think
Porsche's coming.
With their own car.
Porsche's coming with the Mission E, and
so is Jaguar with the I-Pace.
And so is Audi with the e-tron. And these are amazing looking cars, but the Model S is 7 years old. And now the big boys are coming. And they're coming with sexy looking cars at the same price point with better features, faster cars, great styling. And so what was unique for Tesla is no longer unique.
This was really wrong. Not only those models he mentioned were delayed. For those ones that came out, they are more expensive and they have shorter range. No over-the-air updates to make your car better over time, and not equipped with potential self-driving capabilities. Porsche Taycan is absurd. It's double the price of Model S, half the range of Model S, slower battery charging rate, less seat space, and less cargo space. And Porsche's time from 0 to 60 miles per hour is longer than Model S's too. There is no competition.
You don't think there's any point where you look and is there anything encouraging where you've said, you know what, maybe they're getting finally closer to a turning point here?
I think actually it's getting worse. They talked about being a leader in autopilot. They're now a laggard in autopilot. Their technology is behind everybody else's. They're selling
behind who?
They're behind GM, for example, who's going to be on the show shortly. We can talk to GM about that. The Cruise technology is well ahead of Tesla's. And they're behind Audi and VW, and they're behind Waymo.
Again, how wrong is this? All these companies' progress on autonomous driving is far, far behind Tesla. Even Waymo and Cruise. Autonomous driving is a data game. The more real-world data you have, the better you can train the AI. Tesla has exponentially more data than the nearest competitors, which are Waymo and Cruise. And Tesla is constantly getting much more data than they do as we speak from those Teslas running on the road. And now I'll give you a great one. Bob Lutz, former vice chairman at GM.
I've been telling the Tesla fanatics, he's got to get his act together quick because global competition is coming. This Audi e-tron is not a big surprise. We've known it was coming for the last 2.5 years. Mercedes is going to have one. BMW. Porsche is going to have a four-door sedan with a 300-mile range. General Motors has announced 20 different electric vehicle models. And the thing about all of these is they can all be sold at a loss for environmental compliance reasons, and the losses on the electric vehicles can be recouped on the internal combustion ones, which are the ones that 95% of Americans still want.
Again, I don't need to repeat what I just said, but his theory is that existing automakers can recoup the loss from selling ICE cars because EVs need to be sold at a loss, and Tesla can't do that. Well, guess what? Tesla makes a profit selling them.
Everybody in the global automobile industry is going to be offering high quality, high technology, high range electric vehicles, and Tesla has no advantage, no technological advantage, no software advantage, no battery advantage, no advantages whatsoever.
I don't have to repeat myself anymore because you know how ridiculous this was. And now, here is a good one.
And I think in another year or two, we'll see a movie called Who Killed Tesla? A conspiracy movie starring Leonardo DiCaprio.
Okay, jokes aside, I'm not saying people can't make mistakes, but when they do so in public and even charge their clients a huge amount of fees for it, I can't imagine how many people made the wrong investment decisions based on their advice. So, how can you avoid them? Here are 3 quick tips. Number 1, look into the future. Try imagining where the world is going and look long term. For example, do you think that everyone will be driving an electric car in the future? Number 2, understand a company's true competitive advantages and how long they can last. Competitive advantage can be technology or brand or many aspects like locations, and each one of them can last for different periods of time. Some companies have technology so advanced that will take years for their competitors to catch up, and some companies have customers buying their products just because of their brand power. I'm sure you can think of some right now. And number 3, make your decision based on data, but not just some of the data. You want to know the big pictures and the meaning behind the data. The analysts that we just looked at made their conclusions based on only part of their data points. They didn't look at the overall big picture in terms of where the future is going and or understand exactly what those data mean. For example, the same cash flow or inventory shortage situation can mean vastly different things for different companies. Let's take this journey of financial growth together to reach freedom. Let me know in the comment section how you can take advantage of these lessons or examples that we just went through. If you like the content, please support me by subscribing, liking, and hitting that bell icon. I am committed to making this channel as helpful to you as possible. From Financial Growth, I'm Ben Lee. I'll talk to you next time. Cheers.